Last webcast video, we talked about the possibility of rate hikes, which was simply, it wasn't part of the discourse in the financial world. People were talking about rate cuts, and that's going to be the whole benefit of replacing Powell with Warsh, and we're going to have lower interest rates, and that's going to be helpful for housing and for equities and just growth in general. And I just think there's a lot more to the story than that, and that's where, in my opinion, the whole situation in the Middle East really becomes relevant. We've seen oil rally quite a bit since the start of the war, not nearly as much as a lot of oil experts thought it would, or maybe still think it will. And the reason that that's relevant is because the shortages that are potentially coming, not just in energy markets, but also in other commodities. There's a lot of food-related and agriculture products that need to get delivered through the Strait of Hormuz, and that's all being blocked as well. So all of that is inflationary, and we're not seeing it yet in the numbers. But if and when inflation starts to pick up as a result of this, we're starting to see Treasury yields perk up a little bit. The narrative is sort of shifting, or at least I think it should be, because inflation and the subsequent rate hikes that happened in 2021, 2022 is what derailed the tech trade back then. And nobody was looking for that to happen. We were seeing enormous, the Mag 7, everything was up 50, 60, 70% in 2021. And there was nothing that was being seen as potentially getting in the way. And then all of a sudden, inflation perked up, and the Fed had to raise rates, and they did so fairly aggressively. And all of a sudden, all the air came out of the tech bubble, or tech trade. And I'm not suggesting that is definitely what's going to happen this time around, but I do think that people are just ignoring this fairly obvious risk.